The job market has crawled off the floor, as the AFR reports this morning.
Yeah, and it's a good sign, Pete. You know, this is the ATO payroll data. It's not the official jobs report, which we'll get on Thursday. But it looks like 124,000 jobs have been reinstated across May. And let's face it, you know, June is a much more positive month than May in terms of what we're seeing out there. The economists have, as a consequence, they've cut back what they think the unemployment number will be on Thursday from 7% to 6.9%. It could even be a bit lower. So it's all very good stuff. And I think July, they're talking about 850,000 people could be back in work in July. So all good stuff, partly explaining why the stock market's doing pretty well at the moment.
So that's nationwide. I mean, that's not... I was just looking at Dominic Perrottet's speech yesterday, in which he outlined the New South Wales unemployment rate will be at about 7.5%.
Yeah, and by the way, you know, that's a guess. You know, he would be relying on, you know, some good economic forecasting. And New South Wales, being the biggest state, will probably feel it more because, you know, when you get a lot of momentum going and all of a sudden you pull the rug out from that momentum, we could actually feel it more. And I've got to say, as someone who has an office in Sydney CBD, you know, the CBD is taking a long time to come back. It's getting there now, but gee, it's been terrible for the last, you know, probably 2 months.
Okay, on to the US, and retail numbers seem to be kicking along nicely, which no doubt helped the markets this morning and may well do so here too.
Yeah, and I think we're seeing this economists are much more conservative about what's going on. And by the way, none of their economic models would prepare themselves for this kind of forecasting. US economists thought retail would rise in May by 7.7%, which would be a big number anyway, but it ended up being 17.7%. So that's a huge miss, just like the huge miss on the job numbers a few weeks ago in the US. You remember they were thinking of 8.5 million job losses, ended up being like 2 million gains. So I think what we're seeing is the rebound is quite shocking. Economists, and the news is, you know, coming through on the upside. Hence the reason why that, for example, the Dow is up over 2% overnight. And you throw in another thing, Pete. You know, Trump, you know, promising or suggesting he's going to throw $1 trillion at infrastructure. Another reason why, you know, US stocks are positive overnight.
I tell you what, Peter, on the way to work this morning, I noticed that fuel prices jacked up considerably just in the past 12 hours or so ago, from like $1 a litre to about $1.30 from where I was. So is that an indication that, you know, oil's on its way back?
Yeah, exactly right. The more you've got bigger demand in the global economy, the most, you know, the most obvious beneficiary is going to be those selling petrol and diesel and jet fuel for aeroplanes. And we've seen, you know, the airline share prices rebounding as well. The expectation is that the worst case scenario was exactly that things are going to be better. So there's speculation that things are going to be good. But against that, Pete, the IMF have come out and warned that there's a crisis unlike the world's ever seen. But unfortunately, the IMF forecasting hasn't been the most reliable. And let's face it, the investment analysts driving the stock prices out there for big, you know, US companies and worldwide companies believe that the economic comeback's going to be a lot better than the IMF is predicting at the moment.
Okay.